The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I was just looking at the Bloomberg terminal over here. Hope you guys are doing good this morning. We're taking a look at crude initially. Here's the chart for the September contract. Talked about this 43.33 area being a little bit of a lid here, waiting patiently until it got up there and just kind of, again, trading with the trend, the long-term trend down. We talked about this yesterday and the day before. And, we've come off, today to a low of 42, off of that 43.33, 42.08, something like that. So, got to give yourself a little bit of noise area on the stop side. 43.52 was the high yesterday. So again, when you have an instrument that's moving around a lot, you got to kind of factor in a little bit of a percentage of the height of the box, the height of the profile, if you will, to really give yourself some room there. And I hope that that was something you guys paid attention to, that level. We're going to take a look also at something else near and dear to my heart that has now also reached some major inflection points. This is the Aussie dollar. And we talked about this 77, 46, 47 area. We've reached a high of 77, 48, 49 rounded off. So I'm going to call that satisfied. And we're just kind of rattling around there now. News out of Australia, just on the fundamental side. Where's it at? Well, I apologize, guys. We'll come back to that. I had it right here. I don't know where it is. Anyway, obviously bullish for the currency. Throwing all fundamentals out the window, you've got to just strictly look at, we've met some targets in the interim. Now you kind of have to wait. It's Wednesday, and Friday's close is going to mean a lot now. So, again, this is something you just got to be happy. We kind of use 74.81 up into that area. It's happened. That was our initial goals. If you want to leave some contracts on, that's fine too, but not a bad place to take some off the table. Let's see here. I personally think the Aussie dollar is going to move higher, but again, you got to, what's that saying? Look a gift horse in the mouth, or don't look a gift horse in the mouth. Euro. Let's take a look at the British pound first. So they had some issues with a bond buyback program, and I was a little disturbed yesterday. I actually got stopped out of this trade, which was disturbing. But now we're back above the weekly unfair lows, and this kind of reversal off of this area is kind of cool. I mean, we talked about it getting down below this area, not wanting to kind of stay away from these areas on the bottom here. 130.19 reached a low last night or yesterday or this morning of 129.56. So just, I hate it when that happens. But now we're back above the area. I'm still not so convinced that this is going to rally higher, so I'm kind of looking at this as a no trade. And in fact, one of the things I'm looking at is we're just kind of hanging around this DMZ between the weekly unfair lows and the daily unfair lows now, and I don't really see, I don't see the reverse in effect yet, so I'm just kind of sitting tight and taking the medicine from yesterday of having a relatively tight stop in. Okay, so some comments about the Aussie and the DIN. Yeah, I mean, again, sometimes, like, Joey and I were speaking of one day, sometimes it's worth it. Just, again, we've reached a major inflection point in the Aussie dollar right now, but sometimes it's worth it to just leave, if you can afford it, leave a contract or two, or just some small amount of capital on the long-term side that you're really supposed to stay with, and not get mixed up in your position in which way the real leverage is of the trade. So that's kind of the case with the crude oils of the world. Is kind of the case with the Aussie dollars of the world. The Japanese yen, I'm going to hit this really quick. If you look at this from a pure technical analysis standpoint, this is our long-term weekly. We've been in a downtrend, but this 101.33, we met these targets up top of 107.71, 72 up here, and again, trying to leave some on with the long-term trade. This is obviously, if you just look at it from a pure technical standpoint, you weren't really supposed to be going long this. You were only supposed to be going short at inflection points. But this 101.33 area was kind of a big, somewhat back the truck up area for me. Talked about that contra trade into this area. But again, looking at the trend, even so with what I just said about not really wanting to trade this from the short side, even after we broke down technically, myself, I was kind of waiting for this big number down here. That happened. We met some targets. But really, when you look at this, leaving contracts or a small percentage of, the trend side of the equation on can kind of keep you from getting mixed up with, these contra trades against that trend. Right now, the yen to me is a no trade. I think we're, coming into par here with the dollar. Again, I'm not so sure. I'm hoping that this 124.25 is a chance for this thing to play defense. But again, it may flush like we've talked about before it reverses back above, just to get some folks out that are trying to play that par trade. So again, I think it's kind of a no trade right now. The big move has been made that I was waiting on. It was about a 600 pip move, and I think it's time to sit tight on that one. Taking a look at the euro. All right, so again, a trade let me get this out of the way here for you. A trade I've tried to, stay on the short side with the long-term hedge. It's really nothing to me to pick any battles on yet again until we reach this 112.07 area. Haven't reached it yet. That's the next battle point on the short side for me on that particular trade. And again, the goal there is that 108.86 down below. Let's take a look at the Aussie dollar, or excuse me, the Canadian dollar. All right, so very, for the most part, as Larry's pointed out many times, got that high correlation with crude. And, it started giving out of gas a little early here. And crude at that 43.33 area with the possibility of exploring that entire fair auction down. You got to still, I think, be looking at this Aussie trade. As we reached 2 days ago, we reached a high of 132.53. Unfair highs were 133.10, so didn't quite get there. But again, we could just kind of continue to slough off here. That's the weekly. This is the daily on the Canadian, and I actually think we can bust down below this 129.92. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And that Australian dollar fundamental news I was trying to find over here says the Reserve Bank of Australia Governor Glenn Stevens returned to a favorite theme of the over-reliance on monetary policy around the world, blah, 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 blah. So, again, you know, lending credence to the concept that in a condensed version, paraphrasing, of course, that they're not going to want to just step in and start printing money just because everybody else is doing it. So here we go. Let's take a look at gold. Again, yesterday morning we were kind of below these profiles, 1347. This is talked about waiting until we pass that border to get back into the water again on the long side. Remember, folks, this could have just continued to trail down. We had a POC on a weekly on gold that, we talked about it could be an area to kind of play defense against, but I was a little bit more inclined to wait until we at least got back in the balanced area on the daily. Yes, we can look at copper, but that's the situation on gold right now. What do you do with gold? The long term on the December, I don't think that, again, somebody had called in and talked about trading against this weekly and fair high. Obviously, that worked out. I wasn't a big fan of that at the time. I think we were looking at the August contract then, and it got a little bit closer than this on the weekly and fair high of that contract. But again, talking about what I'd said earlier about, leaving a couple of things on to make sure that you don't do anything stupid and trade against the long-term trend, get mixed up. I don't mean say the term stupid. I mean, again, trying to use probabilities. Which way is the edge? Has the trend been broken? In the end, it's not really been broken on the way down. Gold, even though there was a good opportunity we talked about for 600 pips, but gold, we're trading up. We haven't broken down. And even on the intermediate, a little bit of a disturbance there. But that's why I was just like, hey, let's just wait until we get back in the game again on the long side. Let's get above 1347. And that's where the edge is. And I don't see the edge at all on gold with the mindset out there of every economy in the world, seemingly now, except Australia, of trading against the trend, and that means do not short against 1366.67. So the edge is not to do that. You're always looking for what is the edge. I'm taking over as Trump's speechwriter, by the way. Just letting everybody know. Here we go. So let's take a look at the notes. We're going to take a look at copper in just 2 seconds here. Again, you know, this is something, you know, where's the edge? Is it showing itself early? Market's going, you know, the sun comes up and the market goes up, you know. So again, the notes, this is the 10-year, found support here again. Where's the edge? Has the long-term trend been broken? The answer is no. On Ancient Aliens, he always asks questions where the answer is yes. I don't know if you guys watch that show. The guy with the crazy hair. I don't know if you've seen that. Instant star because of his hair. Anyway, bottom of the profiles here. And again, notes and bonds moving sideways. Market's going up. This is kind of, hey, look, I don't want to be sold. And again, we've got a global arbitrage going on. Same story, guys. I know you're tired of hearing it. But again, the boring trade is good. No comments. Here we go. Boring is good. Here we go. So let's take a look at copper. Here's the September contract. And we got a little bit of bounce here. We talked about getting back above 2167 and trying to trade this up into 232.95. I see copper actually moving. You know, I mean, I like how this thing is based. I like how the navigator here down below is almost crossing zero. The momentum is definitely changing, and I think you'll start to see some more good fundamental news out about copper and global usage pretty soon. So again, you know, we're always looking for where can we play defense below 2167, and again, trying to block out the short side and only take longs here. I think you've got a good little trade on here that could get some legs and see some higher numbers. Silver. Achie mama. Had a little move up here. So again, same thing as gold, trying to get above, at least back into the game on getting back at least into the balance area, crossing the $20 an ounce situation. That's working out well. I think the better trade's gold here. That's probably where you're going to get the most bang for your buck on the north side. Beans. Coming up a little slow here today, guys. I don't know what's going on with my... Okay, so, again, you know, the edge is on the downside here. There's a huge corn crop coming in right now, especially around here. Beans have kind of in that downtrend below weekly profiles, kind of like crude, very similar situation, has popped its head up into this $9.99, $10 bushel area. Kind of crowding it today, but I feel like you can lever against this on the short side to explore some of this fair auction more so on November beans. I don't know what John from Philadelphia's comments on this one are, but we always love to hear that. But again, I think we've reached an inflection point you got to pay attention to on the south side here, right around that psychological $10 a bushel area also. Technically speaking, not fundamentally speaking. Okay, so dollar. This is what stops are for. Hovering around this area, 95, 98, 96. Breakdowns, no harm done. That's what stops are for. And a lower number to focus on here now, 95.20. In my opinion, on the long side. The long term just kind of mixing around here in a big fair auction, but again, I'm trying to block out the short side on the dollar and look for long opportunities. 95.98 was one, and the next one is 95.20. Somebody else had a automated driver accident. Let's see here. Where's it at? Another Tesla vehicle has crashed while in autopilot. Let me see if we got a print here this morning. Yes, driverless car accident. But it's wild. I imagine it's wild when you're on autopilot and you're just kind of cruising, eating a Snickers bar, and then the car crashes, and you go, "Wow, maybe I shouldn't have done that." So again, 233 is the big number here. Again, this thing seems to want to look to the future visions of the owner of Tesla. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So let's just take a look at a couple of household names here, if I can spell them right. Apple. Nothing changing here, guys. So again, it's kind of leave it alone, leave it alone. We broke stride on those weekly unfair highs, and there's really nothing up here to hang on to, long or short, at this state. Here's the 240s. Again, nothing really. This will pop up in the scanner and kind of let you know when that happens real time. And one of the things some that I like to do a lot of times is I'll when I'm using the scanner, if I can get it up here. Where the heck is it? It was hiding. Here we go. One of the things I like to do a lot of times is, I'm going to show you real quick here. Come on. I forgot to put oil in it. Oh, Lord. Stuck. Okay, here we go. Looking good. All right, so one of the things I like to do is, you know, in a big run-up, you know, either in custom portfolio or not, is try to look at, you know, when new profiles are attempting to appear. And keep this up real time. A lot of times you can kind of even scale that into this scene. So stocks that have been in an uptrend that are starting to show hints, it kind of dynamically updates real time, starting to show hints that there may be some kind of situation where it's giving out of gas. And Apple is definitely not in this area at this stage. So again, this, you know, keeping this up real time will kind of another just little simple permutation here. And it's trying to flag these things as it happens real time. Mark Faber, I can't remember his name. Poor soul has the gloom and doom guy. If you guys ever read any of his stuff, at some point he will be right, just like everybody who keeps saying this. But he's calling for a 50% pullback in the market now. And, you know, when everybody's kind of getting long and strong and, hey, there's nothing really that could crater this thing and we're going to keep printing money and rates are going to stay low, that's sometimes when things really, really turn around, when everybody gets on the same side of the trade. But that guy has been calling for, if you've, you know, and again, you know, he could use the scanner and instead of being short the index and getting killed, he could try to short weak stocks and find weak candidates, and he could still be right with the gloom and doom. But talking about an all-time onslaught on the short side of the market, as long as he's been talking about it, you get taken out in a body bag if you're just trading the index. I keep thinking of poor Jimmy Rogers short the notes forever. But it's the way it goes. Procter & Gamble, by the way, David White and I are starting a artificial intelligence company, and are going to, there's two guys in the desk right now, but we're going to put a $50 million valuation on it just to start and try to get taken over. Here's Procter & Gamble. David doesn't know about this yet. 86.30, top of the profile on the unfair highs here, 86.30. You know, this is one, I'm actually looking at this for a pullback here. 81.54 would be that. 81.54 would be the kind of ultimate kind of explore the whole fair auction down there. But I think you got a really cool little trade going on here that could hit 84.60 easily. But again, you got a chance to play defense above 86.30. Let's see. Here we go. Let me pull up the Shanghai here because there is some form of action going on. And I want to show you this because, again, you know, have a very thin profile that's appeared, kind of compressing, edging up, and using that to lean against. You know, Shanghai, you know, you forced me to make a trade on this. I got to be long now with below 29.64 stops below. And I actually think we can make a run above these areas now. On the Shanghai, sorry about that. Just wanted to point that out. That's the first time we've actually even commented on this in a while because it's just kind of been stuck in the mud and kind of range bound on a profile that's been in force since February. Got that new profile last week, levering off of there, kind of compressing up here. I think we're actually due some kind of bust out here. And of course, the Chinese government's not opposed to innovative measures to put the propane on something. All righty, let's take a look at Delta Airlines. We got to cover this little puppy. My brother-in-law got hung up in this one. So looks like they're clearing things up. It's 37.10 print this morning. Can we revisit 39.84? You got a chance here to play a little defense, but again, I'm not a big fan of being involved with the airlines right now. So that's kind of a short-term little activity trade there. I think you could stay. I got an email about that. Let's take a look at General Electric really quick. Okay, so I'm assuming, the reasons that I got the email about this one was because we're in a wide profile. On a relative scale, we've got to pay attention to the POC now, 3109, and you've also got a little basing action down here. And I actually like this for a pop, and I like being able to play defense against a long-term wide profile against that POC. We don't talk about a lot unless we have a relatively wide profile from an average standpoint. So I like General Electric to pop up here. I think you got to be looking at buying the breakouts on a thin profile in the intermediate based against that defense area on the wide profile. Chipotle, my favorite place to go get sick. Here we go. Whew. It looks like we're printing 397, that general area this morning. So a little bit of a pop. But again, I think, technically speaking, this didn't work out as kind of a breakout above this 417 area. And to be honest with you, crowding this thing, even though it's a little bit of a pop this morning, I think this thing's going to do another flush. So be prepared to short this as it's kind of lower highs and kind of just compressing down here. No disturbances on the navigator and the long-term profiles there. And just a sick-looking situation. Ugh. No pun intended. No pun intended. Here we go. DIS. Yeah, it's a competition. My favorite two restaurants, Ralph's and Chipotle. We're going to take a look at Disney when we come back, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We're going to take a look at Disney in a second. Just want to give you an update on gold. My idea is, these are just targets up top, 1366, 67, not chances to reverse the trade. Again, we talked about that. What's the edge? Where's the leverage? Disney. Oh, and we're going to look at SWN in a second. Okay, so Disney, is that a real print? It looks like we're in the neighborhood trading 95.35. So Disney, I really like this trade from the short side. I hate it when I like something a lot. But again, I like how this thing has not participated. A lot of news stories, staying below profiles, got a chance to play defense. Market help whatsoever could drive this thing in the tank. Again, trading down a little bit this morning, 95.35. Came off of those weekly unfair highs and daily unfair highs, as you can see. I think we're headed south again on Disney. Solar City. Come on, charts. Here we go. Let's see. 24.49. I think it's a no trade, guys. We got some earnings out on that one. It's issuing weak guidance, I guess. Let's look at VRX. Some notables. Okay, so looks like we're printing 28 this morning. So is that real? Yeah, 28. Here we go. So here's the situation on VRX. Valiant Pharmaceuticals, and here, just to kind of put this in perspective, unfair highs are 29.71. So, don't get too excited about stuff like this. Remember, we're in a downtrend. We're coming up into an inflection point. Again, to kind of regulate that trend again down. I wouldn't, kind of read the paper and just say, "Wow, I got to buy this thing." Literally, it's just kind of a downtrend kind of resistance trade. And I would bet if it doesn't have this incorporated in yet. Let me just go down here and see. Let's see. Downtrend resistance. Here we go. It's not in here yet. It's probably going to be on here as the market opens. Valiant Pharmaceuticals. Downtrend resistance. Okay, wow. Let's take a look at SWN first. Okay, so we've talked about this stock really looking extremely well technically and kind of hanging around above these 14, 15 areas recently. We're trading down a little bit there. I think crude could come off a little bit here. You've had a good run in this stock. It's been one where, I'm going to blow this up a little bit. It's been one where, kind of block out the short side. We showed a lot of strength when crude was getting hammered down here. And then, we were able to kind of find support. I actually thought we were going to lever again off of this area. But, not a lot of harm done in this stock, I will admit. And, you're coming down into the top of the profile here. We're trading 1361, looks like pre-market. But again, I like this trade. I like this little stock. Crude could come back a little bit here, might slough off a little bit, but I love how this thing has just really looked technically very well. And the good news is this week is we've got a profile that's kind of edged higher again. I mean, can we come down to 1211? Yes, you got to make sure you always are able to play defense on whatever I say, 1361. I feel like Kevin Nealon. It's just subliminal stuff. Here we go. But again, that would be the ultimate buy point, 1211. But remember, these profiles have edged higher. This algorithm is saying, it's okay to stay in the water on the long side, and you've got a place to pick a battle. 1356, unfair highs there on the daily. Just got to watch out for crude there, though. Yelp. You're welcome. All right, so 36.99 looks like that's a real print this morning. 36.90 and some change. So, do you come in and just short this because it's gone up too fast in a short amount of time? I don't think you can even think on those levels until you have something to play defense against. And these are the 240s and nothing showing here. Let me see if this is in the scanner. Oh Lord, let me go back to the. Here we go. Nope, it's not in the scanner. If you want it in the scanner, send me an email. Let's see, another SunPower SPWR, just some stocks in the news. Cutting revenue forecast. Ouch. All right, so we're trading 1025 now. Looks like pre-market. So we are, again, downtrend, found resistance recently, not being in something before earnings. I don't know if Kramer got you guys long this before earnings or not. But, we're way down here. Excuse me. We're way down here in this area now. Do you come in and just say, hey, wow, it's on sale? Again, I just don't think playing those types of games can destroy your, brain power, to say at least. That you don't want to play around with stuff like this, in my opinion. Let's take a look at IBM. All right, so stock that's done very well. We've talked about buying the breakouts above 154.09 before that happened, but trading 161.77 this morning. I had an email about this one, and again, I don't know if there's a lot of leverage here. It's a strong stock. The market could go higher. I think you got to just kind of sit tight situation on IBM. I'd rather wait for more longer term inflection points to show up on this one. UTX, another stock that's just kind of the horse is out of the barn on the upside again. 1707, 107.07, got back up, closed above twice on the weekly above here. Again, I think you just look at this as a strong stock that continues to find support. And when we compress up into those weekly unfair highs like that, and then trade above them 2 weekly closes, I think you got to stay away from this one on the short side. So I'm blocking out the short side on that one. Going back into the scanner and looking at the downtrend resistance stuff, there's Disney. We talked about that. Western Digital. We're going to hit this when we come back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Just a reminder, Basil Chapman is going to be taking over Larry's show next hour, so make sure you stay tuned. XLE, again, got some resistance here, 69. Hit that yesterday, backed off on the long-term weekly. There it is, and crude may just kind of slough off here. Let's take a look at the XLF. Kind of edging up here. So, read some articles about this might be the darling sector moving forward. I don't see it. I'm kind of personally staying away from that. Let's take a look at the Bovespa really quick. Well, here we go. Just for the sake of the Olympics, rattling around up here above 57,570. I had to do that. Here we go. Let's go back to the scanner. Really, I wanted to look at Western Digital. So, this showed up on. Okay, so I think Basil's chart is covering the one I'm showing you, but we'll just talk about WDC as if we can't see the chart. This is a this is our weekly on WDC Western Digital. Showed up as downtrend resistance. I'm just kind of rattling around down here. I don't, we could look at this as, hey, wow, it's kind of pulled back to the bottom of the profile on the weekly. But again, I think, and there's something on the daily there to be said for this support area. But I think, market pulls back at all. This is one that's just not going to be able to kind of weather the storm very well. So I'd just prefer to stay away from that. I think you got better things to devote mental capital towards right now. ExxonMobil. Again, a stock that kind of had its spine broken and had a little bounce off that area, kind of Custer's last stance here, 86, 87. But again, now we're just kind of rallying back up into the top of the box, just like on crude, crowding in a little bit. But my feelings are we're just going to kind of settle back a little bit here in ExxonMobil. It looks like we're printing, below 88 this morning, so down almost a buck from yesterday's close, right off of those daily unfair highs. Again, pays to be patient. Wait, stock gets hammered. Let's wait for the market to come to us. Nice little example of that on ExxonMobil. Oh, no problem, Basil. Seeing your charts are probably better than seeing these charts anyway. That's the way I always look at it. I love your show. Again, taking a look at another oil stock, Phillips 66. Yeah, I think, I'm not excited about oil in general right now. So I think it's kind of a wait and see to see where crude's going to go on this. And I think some of the stocks that had showed their self early as, let me just go back into the ETF sector. We got 30 seconds here. Going back to the XLE, and the utilities are, wow. There's the XLE. Some of these stocks that we talked about, EQT, as oil pulls back, these things get, they're the easier trade. They're the weaker instruments. They pull back accordingly. Guys, stay tuned for Basil. He was replacing Larry today. And we'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.